Today Nifty continued to rise. Price pushed higher, held firm and even tested the upper zone again. But here is the real question. Is this a genuine bullish continuation or is price rising without proper value support? Because when price rises faster than value, smart money starts watching very carefully. In today's analysis, I will break down what Nifty did intraday, what the daily time frame is telling us, why the move is important from volume profile perspective, and the key levels that can decide the next directional move. Let's start with the intraday structure. Today Nifty opened in strength and gradually built a higher auction. There was no major panic selling, no aggressive rejection from the top either. Instead, what we saw was a stable higher structure, controlled participation and repeated holding above the important 23,982 to 24,000 zone. Then price extended further and started trading near 24,044 and even around 24,087. Now this is important. This was not a random spike. This was a steady organized upward option. That usually tells us that the market is comfortable trading at higher prices, at least for now. But now look deeper into the intraday volume profile. The key reference from the session is around 24,044. The zone became an important area of acceptance for the current auction. What does that mean? It means market participants were willing to transact there. That level is not just a line, it is a decision zone. So for tomorrow, if price stays above this zone, buyers remain in control. But if price slips back below it and cannot reclaim it, then that can trigger a rotation back into prior value. Now let's zoom out to the daily time frame, because this is where the real context becomes powerful. On the daily chart with monthly volume profile, Nifty is moving up from the lower value region and is now challenging an important higher area. We can clearly see two major higher time frame references: the broader upper resistance zone near 25,739.8 and the important monthly value structure from March and April. Also notice this, that the market has bounced strongly from the April lower region and is now trying to auction upward, but the larger value migration is still not as aggressive as the price movement itself, and that is the warning. This is where the phrase becomes important: Nifty is rising but value isn't. What does that mean? It means price is moving up quickly, but the deeper acceptance from value is not expanding upward at the same speed. When this happens, two possibilities exist. Scenario 1, a real bullish continuation. If market starts accepting higher prices and builds fresh value above the current zone, then this rise is genuine and can continue. Second scenario is a short covering or a weak-handed rally. If price rises but value fails to migrate properly, then the move may be driven more by short covering rather than by strong fresh buying. And in that case, the market can suddenly rotate back to value. So now let's mark the important levels. The immediate upside reference of 24,044 is the current important acceptance zone. Sustained trade above this opens the path for continuation. Next intraday bullish extension can attempt 24,100 and even above. The immediate support zone is around 23,982 to 24,000 levels. This is the first nearby support band. If price loses this support and fails to recover, then rotation can begin towards lower value references. On the daily chart, the market is still below the bigger upper resistance zone. So this area is a positional decision zone rather than a fully confirmed breakout zone. So how should we think about tomorrow? In a bullish case, if Nifty opens above value and sustains above 24,044, then buyers may continue the auction upward. That would mean the market is trying to build fresh acceptance at higher prices. If the case is bearish, the Nifty opens weak or re-enters below 24,044 and especially below 24,000, then today's strength may start looking like an overextended move. Then the market can rotate back to test lower references. So tomorrow is not just about direction, It is about one question: will the market accept higher prices or reject them back into value? One important concept that traders should remember here is that price can move first and value confirms later. If both move together, trend is healthy. If prices move but value does not confirm, caution is necessary. This is how smart money reads the market. Not by candles alone, not even by indicators, but by asking whether the market is truly accepting business at a particular price or not. So today Nifty showed strength, but the next move depends on whether that strength becomes accepted value or remains just a price expansion. That is why this zone matters. So watch 24,044 carefully. Watch whether value builds higher, because that will tell us whether smart money is really buying or quietly warning us. If you found this video helpful, please don't forget to like, share and subscribe, and definitely post your comments below about these levels. Happy trading and thank you.